Hello and welcome to Spread Betting on an Index presented by spreadbettingportal.com. So what is an index? Well, an index is collectively known, they're known as indices. And they are two things. Basically, it's a collection of equities, a collection of company shares of all the companies within a specific region, or it could be based on a sector, or get based on particular growth. There's so many sort of different reasons as to why a particular group of companies' shares, equities, would be sort of grouped together into an index. And is this group of index which are then sort of added together, and these are then presented as a single price in a chart in their own right. So we have, for instance, we have the FTSE 100 as an example, which is a very well-known, internationally well-known index, and it's the top 100 equities, top 100 company shares by share value in the UK that are combined into one index and presented as the FTSE 100 chart. So when you see on the news, you know, the FTSE 100 or the FTSE has gone up by XYZ or down by XYZ, it is this cumulative value of 100 equities of the companies, top 100 companies in the UK, presented as one single chart. And there are many variants of this. We see this in all over the world. You know, we have the CAC, the DAX, Dow Jones, and so much. You know, the CAC is the French one, the DAX is the German, Dow Jones Industrial Average is Dow Jones in the USA. So there are many more, and each country has their own, much like the UK has variations and different sort of reasons for equities to be in a certain index. And of course, they need not necessarily be equities that are in an index as well. It can be based on any number of things, but basically it's a collection of a number of financial instruments or equities or whatever in one place, then presented in one single chart. So why would you want to trade an index? Well, the index, in terms of how we're representing them here, are the most common form, which is the equities indices. And one of the reasons why you would want to trade them is that the information on these indices is easily available. It's one of the things that's sort of in all the newspapers. It's on the news all the time, and the rise and fall that you see in the charts tend to be relatively slow, because, well, not slow, but sort of more steady in that it's not just one company, it's a collection of. So if one company falls, it's unlikely to have an enormous effect on that index as a whole. So as a result, the actual nature of indices, because they're a collection of, tend to relatively be more stable than, say, an individual company equity would be. And one of the other advantages is because they're one of the most common things that are traded, is that the spreads on those are usually just 1 point, and the tools that are becoming more available to you as a trader on indices are becoming more and more easier to use and quicker, and there's some really smart stuff that's happening with a lot of brokers. And the other thing is that nearly every single broker and spread betting company that I've come across provide indices. It's like an expectation. You've got to have the indices there. So what are the hidden benefits? Well, there are some hidden benefits that not a lot of people are aware of. Trading the financial index markets does provide some interesting opportunities. So within each index, there are usually key equities that kind of drive and push the main index. And you can usually find these just by doing a simple search, you know. But basically, there's a group, usually a key collection of equities within an index, as we know them, say the FTSE 100, the CAC 30, and so on. There are a collection of key players, key equities within that index that are kind of driving that. So if you can plot, you can actually plot the sort of key equities within those, and you know, depending on the charting package that you have, you can sort of combine those together and chart them together, and that will help you judge to see moves within the index itself. So because those equities have a direct, strong correlation than the majority of the other equities within that index does. So they have a massive influence. So if you can find those equities within the index that have the key influence, the key push within the main index, then it does allow you that sort of little bit of foresight into what may happen. The other thing is that it does give you opportunities for going long on new entrance into an index. There are a lot of what are commonly called tracker funds out there, which are pensions that track an index, and usually they're the most common indices. So they're usually like the FTSE 100 or the CAC 30 or the Dow Jones. There's so many of them. But these tracker funds, basically what they do is they buy companies that are, in this example, are in the FTSE 100. So when a new company comes into the FTSE 100, because the top 100 companies changes almost on a monthly basis. When a new company moves in, this triggers an automatic purchase by an investment bank on their tracker fund to purchase that stock. And usually they'll buy millions of pounds of that stock. And as a result of that, you will see the equity price go up in value, just simply because there's a lot of tracker funds out there, of pensions and so on, that have been controlled by investment banks, that will automatically buy any stock, any equity that's entering the FTSE 100. There is the converse of that, is that you can also, if you find a company is leaving the FTSE 100, and they tend to be relatively quiet when this happens for obvious reasons, is that when a company is delisted from the FTSE 100, is that as a result of that delisting from the FTSE 100 index, you will see these same investment banks with these tracker funds selling the stock that's being delisted because it's no longer in that tracker. So you'll see millions of pounds being sold when it's being delisted. And you can do searches. There are many websites that provide details of who is entering and exiting certain indexes, and it's worth paying close attention to who's going in and going out. So the index markets offer more than really there is that meets the eye initially. Trading the index markets does offer a good amount of opportunity. And not everyone can see really what is there. It's not just a collection of, and the cumulative value of those presented in chart form. There are other opportunities within that index. Providing you do your homework, trading the index markets can work out pretty well. And it's also a good place to start for the beginner, as they tend to move at a relatively slower pace. So it's usually a good place to start. So don't forget to come and visit our website. It's spreadbettingportal.com. We have more training videos and trading setups and tutorials on technical analysis, as well as some of the best offers that you can expect from some of the brokers out there. So be sure to pay us a visit at spreadbettingportal.com today.